Hi, it's Charlie giving you Monday's market commentary. I hope you're very well. Before we go into the market commentary itself, I just want to go through something regarding the differences between, or similarities, should we say, between taxi drivers and traders. I was watching the recent Horizon program, and they were talking about why we make the decisions we make. And they touched on a few things which I thought were quite interesting, especially when it came to money, and then they did some experiments. But one thing right at the beginning of the program was that they were looking at taxi drivers in New York, and they said that on hot sunny days, taxi drivers will, are less likely to get as many fares because lots of people will want to walk to wherever their destination is, and yet and so they don't get as many fares, but so they therefore stay out for longer to try and make that money that they want to make, and they'll stay out for 16, 17 hours or whatever on a shift in order to do that. But when it's a rainy day, they obviously make their daily target, so to speak, very quickly, and then they clock off. And so what they were saying was that actually what they should be doing is capitalizing on the rainy days and stay out longer on the rainy days, and on those sunny days take the day off. And yet it's that logical side of things. And what it was moving up towards was this loss aversion bias, in that we generally when we're winning, we're obviously quite happy, and we don't like taking risks, i.e. staying out longer maybe, and taking that extra time, or making that extra time to work for longer, as opposed to when we are in a losing or vulnerable position, we're more likely to be reckless. And I thought that's very, very obviously similar to that of trading. And so with those taxi drivers, they're more likely to stay out for longer, when really, it's almost like holding on to losers. Whereas they'd rather just hold out and hold out and hold out and work all those extra hours just to try and make a couple of extra fares, when really they should look at it and say, actually, well, when it's a rainy day, those are the days I should really be capitalizing on. Similar thing with traders. Traders often will hold on to those losers for much longer, but then don't capitalize when they're in their winning trades enough. They bank the profits, and that's it, and they close out and they walk off. So interesting analogies there, I thought, between trading and those experiments. And I think that it's just a good point, because I often talk about hitting your daily targets, and then if you're there or thereabouts, don't overly push it. But at the same time, if you are hitting your daily targets but you're still in a position, then you've got to carry on with that position. And if there's quality setups coming through still, then you still take those trades. Whereas some traders, what will happen is they'll get into a position, take their profits, and then that's it, and they forget about it. Whereas when they're actually in a losing position, they're more likely to be a bit reckless and trade, because they want to try and make that money back up. So just an interesting observation there, really. Right, okay, let's go and have a look at the pound dollar to start off with, and some of these currencies. This is the daily charts here. Yeah, lovely flag pattern we've had on the dailies. It's moving up okay. Nothing really too much more to say about it than the trend remains towards the upside. I still have that bias towards 170 for the pound dollar. I don't know at what point it's going to go there, or whether you never know for certain if it is, but that is a target. I've talked about it before. If we go out to the monthly chart, 170. I'll have to just bring the chart in a little bit so you can see where I'm looking. I've got these highs over here at 170. This is a nice monthly chart. We're in a good trend. So logically speaking, the market likes to go and test old highs. So we've got that 170 over there as a potential. So for the pound, I think that we've still got that potential to run higher again. And it's the same thing with the euro dollar as well, in that obviously the euro dollar had that great day on Friday. And it's just sort of having an inside day today. I think we're going to end up with it's probably waiting for Draghi to start speaking, so we'll see what's going to happen. But if it does just consolidate for a few days, I'm still ultimately going to be looking for euro to break higher again, and up to that 139 level in the first instance, and then potentially 140. So still maintaining that bias, and obviously things will change if euro starts to break down. We've got a daily pivot down at a monthly pivot down at 137. That's the new monthly pivot's just come in. But if it came down, it can come down to there and then still come all the way back up again, just being messy. But after this nice couple of days we had at the back end of last week, I'd like to ultimately see the euro hold and then break higher again. So that's what I'd be looking for. But if we do break down, back down much below 137, then all bets are off as far as I'm concerned. So on that one. And the stock market indices, just quickly, obviously they've gapped down overnight based on the events that are taking place over in Ukraine. So currently the futures are down at 1840. So it could be that, yeah, we've had a nice run, and that's a lovely run the whole of February, and we'll have to see whether these markets can hold, and this is just a little bit of a reaction, and they're going to come back up again, or whether indeed this is going to be the beginning of a little bit more volatility or not. It's a bit too early to tell at the moment, based on obviously the macro events. So we shall just have to watch this space. But certainly there's been a little bit of selling overnight, which is understandable. So we'll have to see about that one. I think I'll leave it at that for now. I don't think there's too much more else to have a look at. Canadian dollar still holding up all right. Aussie dollar sort of daily charts just come down to its daily 50, so we're going to keep our eye on that one. That one's got a bit of work to do, but I'm certainly interested in that one over the coming week or so, so we'll see about that. I think I'll leave it at that. Oh, of course, the yen, I nearly forgot about the dollar yen. That's had a good run down again overnight. So I remember I got stopped out I made money on Friday, but got stopped out just beyond break even. So on Friday, so I'm now out of that yen trade, and so I'm sitting on the outside thinking, oh, I really want to be in on this. So I've just got to wait for another setup. Remember, I'm still looking for yen to come down sub 100 and potentially down to that it's 101 and potentially down to 100 area. So anyway, I shall leave that with you. Have a fabulous week, and we're back on Friday for live trading.